Hi everyone. Okay, so in today's video, I want to talk about what makes a share price go up or down or fluctuate so wildly that it makes us want to vomit. Now, I'll be the first to say that it's absolutely not a science. It's more of an art. However, there are some really important factors that do play a really, I guess, important role in potentially whether a share price is going to go up or down. And it's absolutely worth knowing what those are. So let's dive into them. Okay, so the first thing to know is that shares in most large established corporations are listed on organized exchanges like the New York Stock Exchange. Now, every time a stock is sold, the exchange records the price at which it changes hands. If a few seconds or minutes later, another trade takes place, price at which that trade is made becomes the new market price, and so on. The market price of a stock is simply the price at which a willing buyer and seller agree to trade. So the main factor that determines the price of a share is supply and demand, which is probably a phrase that we all know. As the term suggests, supply refers to the availability of the particular share and demand is the desire for it. Low supply and high demand raise the price of a share, while high supply and low demand lower it. Now you might ask, well, how is supply and demand for a share affected? And so that's what we're going to take a look at right now. Okay, so first up is finance and performance. So corporate finances and performance is what I'm talking about here. So publicly traded companies are required to publish reports that include their recent earnings, current cash flow, and performance forecasts. And these are typically on a quarterly basis. So the reports and a company's subsequent performance after the issuance of these reports can affect supply and demand for a company share. So good performance will increase demand for its share and bad performance may cause it to decline. So if we take a really simple example, not that long ago, just a couple of days ago, Spotify announced in their earnings call that they had overachieved on their targets. What happened? Their stock prices went up dramatically. I can't remember the exact percentage. I think it was something like 10% or 9%, but it went up quite a lot. Now, dividend announcements can also influence the share price. If dividends are higher than expected, then share prices tend to increase and vice versa. Additionally, the company's management and internal relations also play a role in an investor's attitude towards a company, which in turn will affect the price of the company's stock. So let's say leadership is capable and stable and strong, then it's generally considered a company that's likely to continue to grow and succeed. Economics. Okay, so share prices tend to rise during economic booms and they tend to fall during recessions. Interest rates also affect share prices. So in lower interest rate environments, investors will generally look for better returns in higher risk assets. This generally leads to greater inflows into the stock market, which basically just means more cash into the stock market. On the flip side, when interest rates are higher, investors will take the higher rates on offer because of the lower risk involved. So an example of that is an investor might just say, you know what, this savings account over here is giving me a really high savings rate. I'm actually going to put my cash there rather than in stock for as long as that higher rate saving account is in place. Politics, good old politics. So yes, political factors also play a role in stock prices since the environment in which businesses operate is molded by the government. So politics have a direct effect on international relations, regulations, monetary and fiscal policies, lawmaking, taxation, the list goes on and on. This in turn normally does influence the ability of a company to do business, the price of base materials, the marketing and distribution process, and loads of other stuff. And all of these factors may have a strong influence on the performance of a company. So, for example, the sanctions imposed on Russia by the US and European countries in light of Russia's invasion of Ukraine in February 2022, this affected many company shares. The British energy company BP, for instance, dropped substantially due to the sanctions on the Russian energy company Rosneft. So the effects of geopolitical tensions can immensely affect the price of share. Market sentiment. So this is where we start to drift more into the kind of the art rather than the science. But market sentiment is the collective psychology of investors and what they think will happen with the market, what's going to happen next, essentially. So market sentiment is usually based on the factors that I already spoke about, as well as the news and a company's reputation. And a stock price may greatly rise or fall if the general sentiment goes in a particular direction. Often, investors base their trading decisions on trends, either riding the wave of the trend and creating momentum, or believing that the trend will soon revert and going against it. Being able to read or being somewhat good at reading where the market is heading based on investors' inclination allow someone to potentially capitalize from that changing direction. Future expectations and events. So the stock market is always looking forward to what might happen in the future. It's almost never looking at what's currently happening, whether it be the tech industry, whether it be the energy sector. People are always trying to figure out, well, what might be the trends or what might happen in that sector in the coming years. So if it's about electric cars, then what about the supply chain? Or if it's the tech space, what might happen within AI. Everyone's constantly thinking about what's going to happen next and what that might do to the share price. And so that's a really, really important factor when thinking about whether a share price is going to continue growing or potentially decline. Rumors. Okay, so rumors can be anything such as the CEO is planning to step down or the CFO has been accused of fraud or, the product person who came up with all of the most amazing kind of features and new product innovation is about to leave. Like all of those types of rumors have an enormous impact on the share price because let's say, for example, there has been a CEO in place for the last 15 years and throughout that 15 years, there's been enormous growth. It's been very stable. There's been really positive sentiment from the market overall. And that CEO decides to retire. Immediately, the fear from investors is, or potentially, and the fear from investors is that that stability is going to dissolve. And there's going to be a potential that a new CEO comes in who just doesn't have that clarity around the vision. They don't necessarily know the direction they want to take the business in. And there's an uncertainty that will potentially leave investors very uneasy and therefore, could sell their shares. And there you go. So they are a number of factors that influence the price of a share. Now, again, I just want to repeat that it isn't a science. It's never been a science. It's more of an art. However, being aware of these factors can really help you, have a sense of what might happen in the future about whether or not a price is going to go up or down. So being aware of these is much better than just taking a wild hunch on what you think might happen.